Hey everybody, Brad here, aka the Bread Maker, and I wanted to come to you with a quick video that goes over a few different topics, mainly around understanding technical analysis indicators. As a trader, whether beginner or advanced, there's two main areas that you really need to learn and understand fully to be a proficient trader. First is understanding candlesticks, and secondarily, you need to understand technical analysis indicators. And in this video, I'm going to go over a handful of things around technical analysis indicators, talking about which ones to use, how to use them to get a holistic view on the market, and what you can do to be profitable utilizing technical analysis indicators. So the first thing I wanted to touch on is a couple of things related to some common misconceptions and mistakes that I see, average traders make when it comes to understanding technical analysis indicators. And it can be challenging, getting, your brain kind of wrapped around technical analysis indicators due to the fact that there's so many out there. There's hundreds and hundreds and hundreds of indicators that you can use to help, trade. Some more complex and some more simplistic than others. Some fit maybe your personal trading style better than others fit your personal trading style. So there's a lot that goes into understanding technical analysis indicators and utilizing them in a way that best fits you and your strategies. So first, when it comes to understanding technical analysis indicators, you need to have a holistic view over the market. I see a lot of people making one large mistake, which is using a single indicator. They'll use RSI specifically, or something, a popular indicator like RSI, or just a moving average or something like that. And, while this is helpful, then rather than not using it at all, you're still only getting a piece of the market. Think of it as the market as an entire pie, and you want to be able to eat the whole entire pie rather than just a small sliver of it. So what you're only getting this visualization of a part of the market by only using one indicator from that signals a specific type of trade. So that's one common mistake I see. The other common mistake I see is I see people utilize multiple indicators from the same indicator category. So what I want to do is I want to share with you guys an image and a file that I created that kind of gives you a little bit of a more understanding of what technical analysis indicators are and what they do. So there's a lot of different categories for starters of technical analysis indicators: of support and resistance, trend, momentum, volume, volatility, breadth, and other. And you can see here, these aren't all the indicators, but these are most of the most popular trading indicators. I put this little chart together that shows a lot of the different indicators that you'll see here within each one of these categories. So one of the most common mistakes I see a lot of traders make is what they'll do is they'll load up multiple indicators from one specific section. So let's take momentum for example. They'll load up a money flow index, a relative strength index RSI, and a stochastics index, and they'll load all three of those up, and they'll be like, oh my god, wow, this trade looks so amazing, all three of these are lined up. But all you're doing in that sense is you're just looking at three things that show the same information in a slightly different way. So it's kind of confirmation bias in a way, because you're just sitting there making it, and it just makes it look like a more appealing trade, because you're like, wow, I put three indicators on the chart and all three of them are showing that, this is going to go up or this is going to go down or whatever. And then you may be someone that might be like, man, I'm going in heavy on this trade because all three of these are lined up. But again, all you're doing is you're looking at one subset of the market, and then you're looking at three indicators showing information in a slightly different way within that same subset. So you're really not giving yourself the best chance at being profitable, because you're looking at one specific category and focusing on it within the market, and not really getting that full holistic view of what else is going on that could contribute to that trade being good or bad. And then secondarily, I see a lot of people that, like I said before, will just trade one category. They'll just trade one specific. Maybe they're just like, I really like RSI. I'm going to trade off RSI. While that may work out sometimes, more times than not, you're probably not going to be overly profitable by utilizing that strategy, because you're only looking at one piece of the market. So you're really not getting a whole view of the market, whether day trading, swing trading, long-term trading. You really need a larger view of everything to give yourself the best chance at possibly winning. So first piece of advice that I have for anybody utilizing trading indicators and wanting to, do it well is You need to pick an indicator, one indicator from each one of these categories, because there's two ways that you can kind of make a mistake. First is you don't have enough indicators to see the market, and secondarily, you can have too many indicators, which is just giving you too much information, and it's like paralysis by analysis. And ultimately, you're like, I don't even know what to do because there's so many things, and each one of these things is telling me something different. So the way I say, you should never have more than 4 indicators on the chart, in my opinion. Anything more than 4, and you're just overcomplicating things. And you should also, of those 4, you should have 1 in every category. So you can have 1 that goes over the trend, and you can kind of get in a good overview, holistic overview of like, okay, this is the trend and overall direction of the market, depending on the time frame that you're looking at. You should get a momentum one, which that tracks the price movement up or down and shows overall strength of, potentially overall strength of the trend if you're overlaying them together, and or overall strength of buyers and sellers in the market. Volume, it's pretty self-explanatory. It's going to show you the volume, and which also kind of indicates the price action of the market. So it can give you a good view of how much volume is inflowing and outflowing of the market. And then volatility is the last one, and that just tracks how volatile the market is, how big the upswings or downswings are, or how flat overall price action is. So if you're able to get all 4 of those, and you're able to get an indicator that you feel comfortable with in each one of these categories, it gives you a much better chance of winning on your trade and gives you a better overview of what you're looking at in the market. So let's hypothetically say you use RSI or MFI or stochastics as momentum, and that's your main indicator, to signal an entry on a trade. That's fine if you use that, but you need to have these other indicators overlaid on the chart, a trend, a volume, and a volatility indicator, to help you make the opportune decision. Maybe momentum is what you use to signal your buys, but trend, volume, and volatility can help you when to signal that buy, and how long to hold that position, or ultimately what your risk reward ratio is going to be on that trade based off of these other indicators. So these all go hand in hand with each other, and this is something that is kind of really important as a trader to identify and understand how you're going to execute a trade and having your plan set up. Like I said, I see too many people that will just load up in one specific category, and then they'll be so confused as why a trade didn't go their way. And it's like, okay, well, you're looking at the same category of indicators, and they're all showing more or less the same thing in a slightly different way. And then ultimately you're sitting there, pretty much you might as well have just used one indicator, because they're all, more or less indicating the same thing, just, maybe displaying it in a different format. So this is just a kind of quick, brief overview of the indicators. What I'll be doing in my next video is I want to go a little bit more in depth. I personally have my favorite trend indicator, my favorite momentum indicator, my favorite volume indicator, and my favorite volatility indicator. And I have those arranged in a way on the chart that is best suited for myself. This is my personal preference. So, not necessarily something that you may want to use or may find helpful, but what I'll be doing in my next video is I'll be going over each one of those indicators, the trend indicator, the momentum indicator, the volume indicator, and the volatility indicator in a little bit more detail, how I trade them, what I utilize them for, and which ones they are. And, maybe that can help you get a jump start on your indicators, and when you're trading and trying out maybe some new indicators that maybe you weren't familiar with in the past or didn't utilize in the past, or maybe you utilize them in a different way than I utilize them. So I'm looking forward to sharing that. I wanted this video to be a little bit on the shorter side, just kind of giving you a brief overview of indicators and some of the common pitfalls and mistakes that I see with them. And then, like I said, my next video I'll be a little bit more in depth. I'll share what are the main 4 or 5 indicators that I use, and how I use those. So appreciate you tuning into this quick video. Hopefully you learned a little bit about technical analysis indicators. I'll hang out in the comments. If you have any questions there, you can toss them in there, and look forward to my next video that shares the 4 main indicators that I use and how I utilize them. Catch you on the next one. Thanks.